Hi traders, this is Roberto, and this is part 6 and 7 of the Candlestick workshop. I'm going to go over a few trade setups that are current and also go over trading off the higher time frames, which would be the weekly, monthly chart for confirmation, and trading looking at entries on the 4-hour and 1-hour chart. The first trade setup is the Euro Australian dollar. We're looking at a daily chart, and we're looking at divergence setup. And divergence, we went over this in the last video, where we have swing points that are higher but the wave patterns are lower. Normally MACD is a copycat of price, so if price goes up, MACD goes up, price goes down, MACD goes down. But what happens often is that you'll see the opposite. You'll see wave patterns going in the opposite direction of price action. So that's what is called divergence, and it's a good setup for a reversal pattern or retracement. So what I'd like to do is look at different time frames to see if we find support of this setup. So let's look at a weekly chart. Same pair. Let's see if there's anything on the weekly chart that can suggest that this run is essentially over. So we have a bearish engulfing candle from about 4 weeks ago. Just make this a little bigger. This is the bearish engulfing candle. The market had rallied, and a bearish engulfing candle at a previous resistance level. And then price tried to penetrate this level of resistance and failed, and gave us a nice evening star. And we have divergence on RSI. So here's a wave patterns that are going lower on RSI. So far we have divergence on the daily chart using MACD as our indicator in price action. And on the weekly chart we have a bearish engulfing candle. So this is an evening star. It has formed now on the weekly chart. So the week is over, so this candle has finished, and it's bouncing off that 8 moving average line. If we look at a monthly chart, we have another hammer on the monthly chart, but this candle is not finished because we still have about 10 days left or 8 days left for this candle. So if it closes lower, that would be even better. And on the 1-hour chart, we have a double top. We have price bouncing off the same level, and then it broke below this swing low. So that confirms a double top on the 1-hour chart. And on the 4-hour chart, we have Harami, an inside bar, and price closing below the previous candle. So we're looking at several pairs, or rather several time frames that tell us a story that support what we see on the higher time frames. And again, look at a weekly chart, and what do we see? We see a morning star. We look at the daily chart, and we have divergence. So each time frame tells a story, and hopefully each time frame can support the other time frame, and that's what I'd look for. Okay. Let's look at USDCAD, because I'm also in this trade. We have this long run up of about 5,000 pips, and then what happened? We have this hammer, which is a reversal candle, and price, if it does close this month, this is a monthly chart, so if price closes below the hammer, that would confirm this hammer. Okay, so price needs to close below the body of the candle to confirm this hammer. And that's exactly what's happened. So that's on a monthly chart. So we still have about 8 days for this candle to close, and hopefully it will close below the hammer. If we look at a weekly chart, we see a bearish engulfing candle on a daily chart, and price closing below the 8 moving average line. And we also have divergence. Wave patterns that are going lower and swing points that are higher that are match the wave pattern. So if this wave pattern is matched up with this swing point that is higher, and this wave pattern matches up with this swing point which is lower, it just has to be inside the wave pattern, anywhere inside the wave pattern. So this wave pattern and this wave pattern are lower, but price action, the swing points, are higher, hence divergence. Okay, so that is essentially a reversal pattern. So we're doing this is on the daily chart, on the weekly chart, excuse me. And all we need to see is a break below the trend line to confirm this. But the bearish engulfing candle on a daily chart clearly signifies a reversal or a deep retracement, and divergence also telling us so many reasons why the US Canadian dollar most likely is going to retrace substantially for the next, if not this month, certainly the next month. And that's the tutorial. If you want to purchase the rest of this Candlestick Workshop video and also the Candlestick Workshop series, please sign up for our, just go to the website fx-northwest.com and receive the complete tutorial on Candlestick Workshops. Thanks for watching the video and have a good weekend.